Now, for a little global perspective on today's markets, we're joined by Bret Rosen. He is the head of a Latin American sovereign debt for Standard Chartered Bank, and he is a former emerging markets product manager at PIMCO. He just returned from a fact-finding trip to Argentina. Bret, good to have you with us on Bloomberg.
Good to be here.
So what's the tone of investors in Latin America? Let's start with Argentina, because they are, in a sense, still regrouping after the unfortunate and tragic and sudden death of the former president, Nestor Kirchner.
Right, that's correct. The death of Nestor Kirchner has really changed, from a political and an economic perspective, the outlook in Argentina. Prior to his death, we had a certain expectations for the 2011 presidential election and the certain direction of policies within Argentina. And now, post the death of Nestor Kirchner, we've changed that view a little bit in the sense that we've seen the government moderating its stance in the last several weeks, which we can speak about. And we've also now have a different calculus for the presidential elections in 2011 in terms of who the candidates will be and what their chances are.
All right, so what is this new moderate stance? What does that indicate?
Well, what we've seen since the passing of Nestor Kirchner have been several things. One is we've seen negotiations advance with the Paris Club in terms of resolving around $6 billion in debt that Argentina had outstanding with the Paris Club.
What's the Paris Club? How did it get that name, the Paris Club? Is it just they're all based in Paris?
Well, they're not all. It's based in Paris, but it's basically a number of different creditors. It includes Spain, France, Germany, the United States. It's a group of official creditors that had extended loans to Argentina, which were defaulted on, coincidentally, with the debt default in 2001.
All right, so they're going to renegotiate the negotiations that are taking place. They're going to be a little bit more moderate in the demands and the pushback from Argentina. How's the economy in Argentina doing?
The real economy is doing very well. Argentina is a major commodities producer, and so if we look at the prices, for example, of soybeans, which is one of the chief commodities that Argentina produces, the economy has done very well. We think it's going to grow somewhere around 8% in 2010 and possibly around 4 to 5% in 2011. It's also benefiting from what's happening in Brazil. Brazil is one of Argentina's chief export destination. The strength in Brazil is helping out Argentina quite a lot.
Does that come with a heavy dose of inflation?
It's important that we focus on that as well. It's easy to look at economic growth, but also inflation is around 25%.
25% inflation on an annual basis? On
an annualized basis, along with Venezuela, the highest in Latin America. 2% month on month have been unofficial reports for inflation over the last several months.
All right, Bret, we were talking about inflation and some of the pernicious effects of inflation, that it can be self-fulfilling, that if people think the prices are going to increase, well, that just makes them say, all right, I'll go out and shop because the prices are going to be higher. I might as well just spend my money now.
Right. There's a psychology of the consumer in a high inflation country is to spend money theoretically as quickly as you can, because the real value of that money is declining with each passing day due to the inflation and due to the monetary expansion that is happening in a country such as Argentina. So what you get is essentially the inflation feeds upon itself, and it becomes very hard to bring down inflation in a high inflation country.
What relationship should we learn about when we look at Brazil next door to Argentina? Because you talk about inflation in Argentina, but that's not the same thing that's going on in Brazil.
Right.
How have they managed to really have, next door neighbors, but really pursue very different economic policies with different results?
Right. I mean, Brazil's inflation is mid-single digits. You've had some inflationary pressures in the last couple months, but you're still talking 5 or 6% year on year versus 25%, which are the unofficial estimates for Argentina. And it really comes down to a couple things. What is monetary policy and what is fiscal policy in each country? Argentina has pursued a very expansive fiscal and monetary policy. You've seen expenditures growing at around 35% year over year in Argentina.
Is that a political situation? Is that a response to social and political forces inside the country that in Brazil, somehow or other, they've been able to manage more conveniently?
It's been a political decision of the Argentine government. And so, if you switch to Brazil, you've also had substantial expansion in expenditures on the part of the government, but not to the same extent. And you have a central bank in Brazil that has kept monetary policy very tight. It's kept nominal interest rates in double digits to prevent inflation from increasing.
Is that because the central bank in Brazil is less politicized, or at least less under the influence of changes in government than the central bank is in Argentina?
That's true. In Brazil, the central bank is not constitutionally independent, but it's de facto independent. And so, the central bank takes monetary policy decisions based on its own analysis of the economy. In Argentina, the central bank as an institution does not have that type of leeway, does not have that type of independence.
Well, I raise it. I don't want to put you on the spot, but I raise it because, there's a lot of debate going on in the United States now about the political relevance of the U.S. Federal Reserve, and with Ron Paul coming in as the head of the House committee that's going to oversee the Fed, the issue of even abolishing the Fed is creating some dialogue. What about from an investor perspective right now, when you look at what's happening in Latin America? Is this a good time to allocate capital to projects and companies in Latin America?
As a region, we remain very bullish on the region's prospects over the medium term. If you look at the trends in commodity prices globally, if you look at the demand from Asia for the goods that Latin America produces, leaving out Argentina and Venezuela, you have pretty much all the major economies having controlled inflation, running relatively tight fiscal and monetary policies. So we think the macroeconomic policy mix is very good for the region, and there's a number of fantastic opportunities depending on each country.
What would you focus on in terms of specific industry groups? We've had representatives of various farmland companies. We know that that has been an area and a topic of interest, particularly in Argentina, buy farmland. Is that an area, or do you want to go for more domestic-oriented producers, or even those that produce, products for export?
Well, one thing, I think it depends from country to country. You mentioned the Argentine example. In a high inflation economy like Argentina, there tends to be more demand for real assets, such as farmland, as you mentioned. If you look more broadly at Brazil, Peru, Chile, the fast-growing economies of Latin America, the opportunities in the domestic sector are quite impressive. Within retail, for example, within shopping malls in Brazil, for example, we've seen phenomenal growth. The banking system, if you look at a country such as Peru, such as Mexico, for example, credit to GDP remains very low. So the domestic sector, I think, over the next several years will complement what we've seen in the past several years, where the export sector has driven growth.
Now, I know it's just anecdotal, but if you're flying back and forth between the United States and Latin America, are the planes full of business people coming back and forth, trying to do deals, trying to make investments happen?
The flights are full, the hotels are full, the good restaurants, which I'm fortunate enough to sample from time to time, are full. And so you do sense, especially in Brazil, more so than the other countries, that there is a bit of a boom going on. And I would cite as well just the prices of, anecdotally, restaurants in Sao Paulo are on par with here in New York, if not more expensive.
What is the impression when you speak with people in Argentina, in Brazil, in Peru, and so on? What is their impression about what's happening in Venezuela? Is that a concern for them?
It depends on the country, because Colombians tend to be more concerned with Venezuela due to the trade links and due to the fact that they share a border. The other countries, I think they look at Venezuela with concern, but is more of an isolated case. And at the end of the day, what does Venezuela export? It exports oil, and most of that oil is going to the U.S., it's going to China, it's going to parts of the Caribbean. And so the economic links, let's say, between a Chile and a Venezuela are not that strong. But certainly from a pan-regional standpoint, I think there is concern about the political situation and the direction that you've seen the government go in the last several years.
All right, we're going to have to leave it there, but I want to thank you very much, Bret Rosen, coming to us from Standard Chartered Bank, giving us some insights and really revealing a little bit about what happened on your trip, your fact-finding mission to Argentina. Thanks very much.
Thank you.